Hey everybody, welcome. It's Pete. Welcome to the weekend edition of today's best stock picks. We're going to be creating a game plan for Monday, April 13th, 2020. A lot to discuss today. The question for today is whether or not we reached our resistance level in the market and we're going to be rolling over. Some signs point to a lot of stocks breaking out. Other signs where some big tech stocks and energy stocks actually had a little bit of reversal. We're going to take a look at those, determine whether or not it was just slight profit taking, whether it was just light volume ahead of a day that we had a 3-day weekend and the market closed a little early, or was it just an opportunity for those that were long the last week or two to take profits, and do we resume the downtrend? I actually have a pretty strong opinion on what I think is going to happen next. We normally post these videos in the morning during the week. Generally speaking, 7:30, 7:45 at the latest. When I do get them done in the afternoon for the next day, that's usually when you have the most time to dig through the list. If you find these videos helpful, absolutely subscribe so you get updates and you know when the next video is coming out. We generally have 2 videos that we put out every day. One is best stock picks and one is stocks for breakfast. I would love to see you in both of those. Very big thing that's important. Number one is I hope everybody's safe. That's the number one thing with what's going on in the world right now. Number 2, happy Easter for everybody who's celebrating today. And number 3, which is really important, is if you have any questions at all about what I'm covering, if you have any stocks you'd like to see reviewed just to put a little bit of a game plan together, absolutely leave a comment below and I will get to it as soon as I can. If you want to send me an email instead of promoting it in the comments, I'll put my email below as well. It's pete@stocktradingpro.com. So let's get into it. But first, I want to discuss something that is huge, something that is so important that most traders completely, it's part of it, whatever. I'm not talking about a trading journal, although that is important. I'm talking about a tracking journal and a trade that played out on Thursday and Friday that was a losing trade prior to that. And I said, keep it in your journal because the idea is still valid if it trades back above a certain level. It was a big resistance level that we were watching. Not only did the stock get back above that level, it hit our profit target in 2 days. 2 days. Unbelievable lesson. This is not looking back and saying, oh yeah, whatever, after the fact, bullshit. We called this trade from where it was up there on April 2nd, pulled back, took the trade, got stopped out, and then the trade reignited, and we're going to take a look at it now. So it's not so much about the profitable part of the trade, although that's awesome, right? I'm actually very happy. Quite a few people emailed me about it. I'm super happy that you stuck with it, even after taking a loss. Because remember, monster difference between stopped out versus stopped out and the trade is still valid. Set an alert, or you want to be really advanced like what I do with professional traders do. They don't just necessarily set an alert for back to that level. So in other words, if it gets back to that level, I like it. At the very least, I'll keep an eye on it again. But what we do is we place a buy stop of 100 shares at that level. So it actually shows up inside of our position summary. So now we're watching the trade and we don't want to miss it. We're actually in the position. It lights up in our box. And now we're like, oh gosh, it hit the price that I wanted. Is it valid? And this one, you needed to be really alert because setting alerts. You needed to be alert because it was on fire after it took off. So I'm going to show you, I'm going to share the charts of that trade from the original call that we made to the getting stopped out to the re-entry price and the stock exploding. And again, it's not about me making the call. It's about me showing you exactly how professional traders make the initial assessment, put the trade on, be 100% okay with getting stopped out if it was the right trade. Again, there's a big difference between a losing trade and a bad trade. This was a good trade that didn't make money. Having the alarm set and getting right back in, and what a payoff it was into Thursday and Friday. Then we're going to take a look at the weekly charts and how there's a little bit of conflict between where the weekly charts look, which in our vernacular, our terminology that we talk about is well bid, but then we hit some resistance levels that may or may not have been the reason the market kind of stalled up there. We did make a really good call on Friday, and I hope you took advantage of it, where we expected the market to open higher and have a really solid opening. We're actually looking to hold to the close, but volume kind of dried up. But that's the difference between individual stocks versus trading ETFs. Quite a few people right now are mostly trading either futures or ETFs like the SPY, the Qs, that kind of thing, and not worrying about all the individual stocks. However, Friday, if you were in individual stocks as well, you would have gotten paid. There was a little bit of frustration in the private chat with the coaching group, where a lot of people were in the SPY and it really wasn't doing much. And it was kind of a conversation about going back. Do I go all the way down to the 1 minute chart versus going up to what I normally never go below the 5 minute chart, because I just kind of feel like I don't like to go down to that micro time frame. However, that doesn't mean there's anything wrong with that. And Jerry actually had a pretty heated conversation, a good conversation, a good healthy conversation, which is the whole point of the coaching group, right? You're not afraid to ask questions and get positive feedback. And we had a good back and forth about it. So the micro time frames helped a little bit if you were trading the indices, but there were plenty of stocks, which we're going to talk about today, especially some of the financial stocks that exploded on double volume, got some really good follow through. JP Morgan, unbelievable on Friday if you were in some individual shares as well. So we're going to go back and forth between those. But first, I want to get to the trade that I was talking about. And I hope that you guys print the charts out, maybe take a screenshot or whatnot, because it's a really good example of the difference between an amateur and a professional. An amateur will give up on the idea and just go look for something else, but you did all that hard work and found what you thought was a good idea. Sure, you can go and scan and look for other stuff that you might feel might be just as good of an opportunity, but that doesn't mean to give up on the idea if it's still valid. That's the most important part. So I hope you take screenshots of what I'm about to show you. So again, if you have any questions, leave a comment. If you'd like to see something covered in a future video, also leave that feedback as well. And definitely subscribe to the channel. It would really be something I would appreciate. So let's get into, first we're going to take a look at the stock that I was talking about. And you can see, I don't know if you can see it up on the top here, CHWI Chewy. This was April 2nd that we made the call. And we actually put this in the Smart Money Alerts newsletter, which is free, by the way. I'll put that below the video as well. Basically, we said on this breakout inside candlestick, we were looking for it to pull back. The ideal entry would have been wait for it to pull back, have a limit order at 34, look to bid to 34, and if it closes before 34, you pull the plug. Very, very clean. This is, and actually on the charts here, this was a much longer breakout level where it mattered. It was a significant level of pop through and a significant area that we expected support to come in. This is also, I don't want to gloss over this. This is actually a trading signal as well. Breakout inside candle, trade back in the other direction. It's kind of an aggressive trade because you're trading against the most recent price action. But if you know how we build arguments for trade, if you break out, you should follow through with well off, in this case, well bid, right? It didn't. We went breakout inside candlestick, and now you can see where we pulled back. But this, I'll show you on the next slide where it pulled back. But this is the important part here. We actually preset the trade. We were looking for it to pull back from basically this close around 36 to look to bid around 34. So I actually had a limit order down in that level for the trade, and the stop loss was a close below 34. So you can see we actually got the entry here where it actually gave us the entry here with the limit order obviously in front of 34. You don't want to bid the exact price. You can also miss it quite often, and then got stopped out. But we said very, very clearly, stick with the trade. If it gets back above 34, I like it. And actually, if you remember, if you happen to be a part of Smart Money Alerts or you watch the video, we were looking for a $9 rally off of 34. And we basically said the last rally was roughly $9. So every time it's been rallying, it's been going up $9. So again, this is a huge question I get. How do I figure out where to book my profits? Don't guess. The stock itself is telling you exactly what it normally does. So look to the left and say, when this stock moves, how much does it normally move? And that's what I can say will be my probable profit target. So in this case here, we absolutely said from 34 up, we were looking for a $9 profit target. So here's what ended up happening on Thursday and Friday. Just an absolutely amazing example of follow through on a good idea that you got stopped out on, and then looking for the trade to continue because it's still valid. So again, I'm not patting myself on the back, although I hope a bunch of you, besides the people that emailed me, got in on the trade, because this is just a phenomenal trade on a boring day on Friday as well as a great example for you to put into your chart books, put into it how significant it is to have a tracking journal, very similar to what we've been talking about in Netflix, which has not triggered the trade, but it's in the trade every day because we keep looking at this. And if and when it eventually gets above 385, that's going to be significant and gets above 385 and stays. And you can see we've been not been able to get through that. So again, that would be in the tracking journal. So I hope you really take to heart that was just an amazing trade in Chewy. 2 trades actually. One was the setup. Number 2 is the stop loss. So that's the same trade, but then setting the alarm above 34 or setting that buy stop for 100 shares to get put into your stock watch, and bam, you got the trade, right? So we're going to go right into the SPY. We're going to cover the broader market in general. Now, there's a lot of talk about whether or not we stalled on Friday and whether or not it was because it was a light volume day ahead of a 3-day weekend, or if you watched the video that we did, I think it was Thursday afternoon, where we discussed the SPY actually hit perfectly a 50% retracement level, which more often than not is the first place you would look in any security for. If it hits that level, that could either be a profit target or a spot where you expect the sellers, in this case here, the sellers to come back in and reverse, heading back down. At a minimum, it's a number you need to be aware of for profit targets. So you can see here, just to keep things as simple as possible, because I'm some of the best feedback I'm getting from people, both in email and comments, is we're talking about stuff in simple terms and building arguments, as opposed to having 5,000 things on the screen that makes it really difficult to have conviction, that excites me, because I went through all that myself, where it's very challenging when you have indicators all over the place and you just can't trade with conviction. I want to teach you guys to build solid arguments for your ideas, and now you can hopefully learn that the stronger the argument, the stronger your conviction. The weaker the argument, meaning you only have one reason for wanting to be a buyer or a seller, that moves your conviction level down, which should obviously affect how you're going to manage the trade, how you're going to allocate risk, what your profit potential is going to be, and how you're going to manage the profitable trade. If your conviction level moves lower, but it's still a decent idea, you can still take the trade. You'd lower your risk profile and book into momentum pausing versus being to add when momentum pauses, looking for the next move. So if we just do a general number here, we say the SPY right around the 340 area, pulled back to around 220. So basically it's a $120 move right there, right? Half of that is 60. So you would add 60 to the 220, and right about where we are is the 280. It actually got up to 281.20. So this is roughly a 50% retracement. Generally speaking, that's where we're looking for a pause in the price action. So heading into next week, there's a good chance that Monday and Tuesday we can see some sort of pausing price action. If we start to pull back, we'll know that this was a little bit more of a bear flag on the weekly charts, which you could take a look at right now. Now, the question is, we obviously can't fight what's going on right now. So we have longer term order flow to the downside, shorter term momentum to the upside. And that's actually a big thing I want to discuss, because that super simplifies your chart analysis. And I've gotten some questions about that with conviction and how long to hold trades. And I just want to make it clear. If you're talking about the price action that's happened between earnings reports, and whether it's earnings reports or the last 3 months, that's generally from Dow theory, what you would call the intermediate trend, which is where most people who are active traders, such as myself, that's the perfect trend that we would trade. If that 3-month window, that 3-month trade is perfectly trending up, perfectly trending down, it's super obvious. Remember, that's the #1 question. Is it obvious? Then you start to look at trades. So that order flow over that last 3-month window, which again, for me, is between earnings reports in the ideal world, right? The opinion that came out and the bias that came out after earnings and the forward guidance, then you start to trade in that direction. And usually you get nice, clean order flow from the big money, the smart money, the market itself that continues to go in that direction. The momentum is the most recent candlesticks. The best case scenario is when longer term order flow is doing the same thing as short-term momentum. So now you have short-term momentum, which could be anywhere from 3 to 5 recent candlesticks, could be the last 2 weeks on the weekly candlesticks, but that's just candlesticks. So you have, getting back to building the argument, you build the argument with what's recently happening and whether or not it's in sync with what's happening in a longer period of time. When you have both of them, your conviction level goes higher. When you only have one, meaning the short-term time frame, so in other words, I'm getting this a lot from people right now who are doing nothing but day trading. Well, Pete, the market is changing direction all day and there's all these monster opportunities. You absolutely can do that. But remember, you're only trading on that little time frame of window, that hour of buying or selling pressure versus the last week versus the last month. The more of the map you have on your side, the easier it is to have conviction, and you expect really good follow through. So that's what it means to build a good argument. So we're going to go back to the screen. And we just built the argument for the SPY that we hit the resistance level. We have a bear flag, and be honest with you, what I think I'm going to be looking for tomorrow is I'm going to be looking for a higher opening tomorrow to reverse, and then how we handle that first pullback is probably going to dictate the price action for the week. So what I don't like in a lot of stocks, which we're going to start out with, is some of these tech stocks that were really strong, that had some pretty solid bearish days yesterday, meaning Friday. And you can see here, Broadcom actually had a bearish engulfing candle, which is not a good sign. What's also interesting is as we actually were trading higher here, look at the difference in the candlesticks here, where there was a lot more green versus these, where there was red, 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 despite going higher. So we broke the downtrend and clearly held above it, but I don't like this. So in the short term, I think we're going to see a little bit of selling on Monday. That's my my forecast, my prediction, my game plan, my bias, whatever terminology you're comfortable with. So these tech stocks, the game plan for tomorrow, meaning Monday, April 13th, is we're looking for a lower opening, and if they continue to trade lower, the bullish stocks are going to let go. But the bullish stocks we're not going to short sell. However, what you need to pay attention to is, do we open lower, reverse, and then get back above Friday's lows? Then we can consider looking to be long again. So again, that's real trading. Real trading is, do you have a scenario of if this happens, then this happens? So the first part is we're not shorting them. The second part is, if we open lower and rally again, do what I said before, like we did in Chewy. We have those buy stops up there to be ready to initiate a trade if it gets long again. So again, these tech stocks we're looking at that have been strong, that had the reversals. We just looked at AVGO, we just looked at NVIDIA, now we're looking at FTNT, which is actually an inside candlestick breakdown, which again, another strong signal that I hope you started to game plan. Inside candlesticks, breakout or breakdown, that's showing exactly what we're looking for, is a trend day. On those kind of days, the consolidation expands and you get one really solid day where you can hold to the close and get a really nice play out of it. Also, love this when this happens, breakout inside day. What did we just say a couple of minutes ago? We actually broke out inside day. You're supposed to get follow through. Not only did we not get, well, we got a well-bid candlestick here, but closed on the low, followed by an inside candlestick, followed by a trend to the downside. So really good, quick example there of building the argument. So FTNT, I do like the most recent, and this is a good example here too, the bearish order flow versus the bullish momentum. And I'm still saying this is bullish momentum because it's mostly just the individual candlesticks that we're recently trading. But if this stock opens lower and pushes lower, I'm going to be looking to bid for this stock again, looking for, I want to see the ultimately getting above 110, looking for 122. So you might want to write that one down. Next, we're going to look at Citrix, which has actually been a stock that we've been having in the game plan as well. We liked it if we stayed above this level. And for the most part, we have, and we pulled back to the 140 level. We really need to stay above that level. I like it if we get above there. And the question now is, you see all this mess here. Again, if we were in my office and trading together, you'd be saying, Pete, do we like Citrix above 140? I'd say, yeah, but it's a mess. It can't get above 140 and make a decision. I like it better above 147.50. So let's make a note on that and keep that in the tracking journal as well. Micron has been one that we're watching as well. But again, I don't like this huge bearish engulfing candle, which just sucked up the last two trading days and closed near the lows. So I'm not as interested in this stock anymore as well, because it keeps going into these ranges and it could drive you a little crazy. AMAT as well. Really the biggest thing I want to point out here is the bearish engulfing candles, bearish U-turns on a lot of these tech stocks. Probably going to have lower openings on Monday. I'm looking to see how they react on the lower opening. So as far as some strong stocks we've been looking to bid tomorrow, Chewy obviously is one that we like. The problem with Chewy right now is the amount that it exploded over the last 2 days. If you're still long the stock, whether it's options or stocks, if you're still long, I'm looking for a higher opening tomorrow and booking profits into the higher opening. I'm not long going into Monday, full disclosure, so I'm not there right now. But if it does open higher, we can expect it to trade sideways for a little bit and then look to initiate another trade. So a good stock to either book profits on or look to initiate a trade. Keep it in your tracking journal for the next couple of days. Newmont, NEM, same thing. Actually, nice inside candlestick breakout through 52. I like this stock. Actually, I'm looking for a higher opening in this stock tomorrow as well. If we happen to pull back, we know that the 52 level area is the spot to look. So again, now what's interesting here is if we look for another entry, this is a good example here of what we're watching for. basically, let's say 45 to 57. So that's a $12 move. If this stock has one more day and pulls back, we know that the next profit potential would end up being 12. Now, 12 is probably an exaggeration because you see this is an abnormally large candlestick compared to what it normally does. This is probably a little bit close to what it normally does, which is actually that's $10 as well. So it's really not that crazy. Both of these moves are roughly $10 or $11. So, all right, so there, we just worked that one through. And the next one we have is General Mills, GIS. And the reason I like this is look at where it's finally gotten through this level. It's finally cleared this 55 level, staying above 56. Now, the problem is every time it's gotten above there, it's pulled back. So we need to stay above 55 to like this trade. I don't love it right now just because it's having problems. Now, here's the scenario. If it opens higher and gets through 58 on Monday, I'm going to be looking for a run at 60 and maybe just have it as a day trade and reaching the exhaustion. And what I'm looking for is actually pushing through, pausing, staying at 60 before the next move up. So tomorrow would be a higher opening looking into 60 as a day trade, expecting 60 to be where I trail my stop up to and then get out at that price. We actually had a question about Microsoft last week and a trade that we actually talked about where we were looking for it to bounce, pull back, consolidate for a couple of days and rally. That was really just more trading off reading the tape and the price action where it was solid push up, looking for it to pause. And now we actually have almost two inside candlesticks here, not quite inside, but we do have 2 days of consolidation inside this candlestick. So mark it down, look for a trend day in Microsoft, 1 day strategy, explosion out of the 2 day consolidation. Could be to the downside and joining all these other NASDAQ stocks that are pulling back, tech stocks that pulled back. So I'm looking for a trend day in Microsoft. Best case scenario, we've moved to the upside. However, if you look at the upside, there's resistance here, 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 here. So not really a lot of room to the upside. So be aware if it breaks out to the upside, it's a trend day, know where your resistance is. If it breaks to the downside, you actually have some room to go. Now, is that a counter trend trade? Yes, if you were trading the trend. An inside day breakout is a 1 day strategy that's not really trading with the trend. If it breaks in the direction of the trend, awesome. If it doesn't, the trade is still valid. We actually want to talk about some stocks on the short side, which actually this is going to be kind of fun to take a look at. So if you notice, one of the scans that we run every day, I call this my average true range short complete price action. So in other words, it meets all of the criteria of a potential short sale, including my minimum criteria, which is stocks only, average volume 2 million, and average true range over $1.50. What's kind of interesting here is you look at the scan, you're like, oh my gosh, only 6 stocks meet the criteria. My God, the market must be turning around, right? So here's where it gets kind of interesting because this is what separates amateurs from professionals. Right now, we're taking a look at and we're saying, okay, there's only 6 stocks that meet the criteria. That must mean that the market is just ready to turn around, right? Well, look what happens if we just remove what happens, which stocks meet the criteria of being above the 20-period moving average. We go from 6 stocks to 165. So it's kind of like the hidden virus, timely for today's market, below the market right now, where it looks like none of these stocks or hardly any of these stocks meet the criteria, which on the surface you'd be like, oh my gosh, that's great tape reading. Hardly any stocks meet the bearish criteria. That means we're turning around. But really, it just meant that a whole bunch of stocks rallied above the 20, but they're still in bearish territory compared to the rest of them. So I wanted to pull that up because it's a fascinating look on we're not turned around yet, okay? So anyway, those are the stocks that we were talking about. AAL still met the criteria, and I'm going to talk about these in a little bit more detail. Actually, I'm going to go to DAL. Delta, we're going to talk about Spirit as well. And AAL, I'm going through the airlines and the cruise lines because a lot of people are writing in and either emailing me about them or saying whether or not we should be getting involved with them. And here's the difference between trading and investing. These stocks are clearly in the middle of nowhere. We've discussed quite a bit the difference between accumulation and short covering. Accumulation takes a little bit longer when there's a lot of buying going on. These stocks will clearly be expected to rally if and when the pandemic subsides and we start to see these stocks bounce because we're going to start getting back to normal, right? But right now, they're in the middle of nowhere. Right now, there is no trade. Right now, they're in a trading range. So there's a difference between something to do now and a trade where you think you're going to catch the bounce because they're beat up. If you're catching the bounce because they're beat up, like a lot of people did in Boeing about 2 weeks ago, that trade's over. You caught the oversold bounce. You got the dead cat bounce. That trade's over. A lot of these stocks are in the middle of nowhere right now. If you like these stocks, they're not trades right now. They're investments for a longer term play. Let's make sure we get the distinction between those, because some people are writing in and saying, but you said, but accumulation is an investment over a longer period of time. It's not the stock cratered, it's in buying a bottom. There's a difference between the two. So anyway, that's what's going on in those guys right there. Most of them, in the way I'm looking at them, they're kind of stuck in the middle of nowhere. I do want to get into the energy sector a little bit, which has some potential reversals going on here. We had I'm just going to keep this as simple as possible. This is actually what I'm looking for in this sector right now. I'm actually looking for this to reverse right now. I kind of feel like we got up to resistance. We had the news 2 weeks ago that saw them all bounce. This was the spike over here. This is what I'm watching for in all these, whether it's COP, CVX, ExxonMobil. I'm looking at these to reverse for next week, for the week of April 13th, looking for a short sale potentially for the week. And that would look on the weekly chart like this, where we'd be looking for which again, topping tail, not a good sign for follow through, right? I am looking for well offered to come in and weekly candlesticks that look like this for at least this coming week. So we're all clear. So we have ExxonMobil, which is XOM, COP, CVX, and actually FANG is another one that we're looking for that to reverse. On the other stuff that's pretty interesting is I want to look at some of the stocks that exploded on Friday, and I'm actually I'll really dig in a little bit here, and we take a look at the one stock that was probably one of the better trades on Friday if you were ready right out of the gate. JP Morgan from 96 to 100 and 150, so $5 right out of the gate on an opening candlestick breakout, and a pretty good pullback to trade right up until 2 o'clock in the afternoon. So anyway, what I want to talk about is the stocks in the sector. A lot of them cleared 20-day highs. I'm just going to go through them so you can write them down. JP Morgan, and here's the key: double normal volume on the breakout. That's the big part. That means a lot of smart money activity in large green candlesticks, taking out those levels, so they have to go into your watch list for Monday. So Bank of America as well, Wells Fargo, a stock that's been beat up for a while as well, and Square had a really, really good day, even though it closed on the lows on Friday. So the trade in those financial stocks this week is we are looking for follow through, which means for me, that means my buy stop will be above Friday's highs to look for those entries. If it trades back into those levels, pull the trigger, no big deal. If it follows through, awesome, hold it, look for another few days. If you get filled on a buy stop above those levels, pull back, have a disciplined stop loss, know how much you're willing to put in harm's way in exchange for the profit potential. If the trade follows through, awesome, that's what a real breakout's supposed to do. If it doesn't follow through and the whole overall market pulls back, be disciplined, take your loss, look for the market to find a bid, and then specifically those stocks. It's important to recognize when a whole sector or industry, in this case, financial stuff, is catching a bid at the same time. And catching a bid means that there's support. We're breaking out with good volume and hopefully well bid a couple of days in a row, a couple of weeks in a row. We're not seeing well bid in a big way, but you can't ignore large volume breakouts taking out 20-day highs. So the financial sector, that's the game plan for tomorrow specifically, and how to play both sides, both how to enter the way I'm entering and how I'm planning on managing the trade. So if it follows through and doesn't and provides some profits, awesome. If it doesn't, part of trading. Remember, we said trading loss is a business expense. That's a big thing to really get to recognize and accept. Once you know you have to put money in harm's way in exchange for profit potential, no different than having rent as any other business owner, paying your electric bills or paying your employees. You have to spend some money to make money, and some of them are going into inventory, right? So anyway, that's our best stock picks for Monday, April 13th. That's the game plan. Thank you so much for watching. I'm Pete Renzulli. If you like the videos, please subscribe. If you like what we're covering and you want something reviewed, absolutely leave a comment. If you have feedback about something you'd like us to review as well, leave a comment with that as well. Be safe, everybody. Have an awesome day.